Welcome, everyone. I'm Mike Brashazadeh.
And I'm Ashley Ward.
And you're listening to the What Matters podcast, and our mission
to spotlight top RIAs, wealth managers, and investment professionals who are redefining wealth management.
Join us as we dive into their journeys, strategies, and insights.
Whether you're an investor or an inspiring pro, this is for you.
Get ready for impactful conversations on the What Matters podcast. Hey, everyone. Welcome back to another exciting episode of the What Matters podcast, where we dive into conversations that truly matter. I'm your host, Mike Brashazadeh.
And I'm Ashley Ward.
Today, we're excited to have Jamie Menges with us, Vice President and Shareholder of PDS Planning. Joining us, PDS Planning is privately owned registered RIA in Columbus, Ohio, managing over $1.6 billion of assets for their clients. Jamie is a certified financial planner and a certified public accountant, and he plays a crucial role in leading the firm's marketing, branding, and business development efforts.
Jamie's dedication to simplifying financial decisions for his clients and his leadership in the industry is truly inspiring. We're thrilled to share his insights with you today, audience. Welcome, Jamie.
Thank you very much. Thanks for having me.
Well, we're very excited to have you here with us. Thanks again for joining us. Let's dive right in. So, Jamie, let's begin with your journey, your origin story in the industry. And can you share with us a little bit about your background and really the experiences that led you to where you are today with PDS?
Yeah, it's like so many people, just kind of a little bit of a winding river. But I got out of college from Miami University with an accounting and finance degree. Went to work for a public accounting firm for about a year, and I was doing back office record keeping for retirement plans. And what I kind of just found myself missing was the opportunity to interface and have relationships that developed over time and evolved from the very early stages of business development through that kind of trusted counselor role. So I started looking for some alternative paths to use those skill sets. And what it led me to was a company called Principal Financial Group. At the time, they were the leader in the marketplace when it came to number of retirement plans. And that seemed like a good transition from my technical knowledge of working on the administration and record keeping side. So moved over to Principal here in Dublin, Ohio, and had a great run there for about 7 years. And what ultimately ended up happening was I developed a retail client base. And so individuals and families who I ended up providing what amounts to today's modern version of financial planning advice to. And so as that evolved, I realized I wanted to get to a higher position of independence. And I joined a private investment management firm also in Dublin. And the firm really had a focus on investments for their clients. And so that gave me a great opportunity to see how a small investment advisory firm was run, to sharpen my investment skills, rounding out some of the other things I had learned while I was at Principal. And then fortunately for me, in late 2012, I was approached by PDS Planning, which was a firm completely independent, founded in 1985. And they were looking for someone to step in and participate in the management of the company, help with their business development efforts. And that was a unique proposition for me because I wanted to get my clients to a completely fee-only registered investment advisory firm. So in February of 2013, I moved to PDS, joined their ownership ranks in 2014, and now today, hard to believe, 10 years later, myself and 3 other partners manage the firm on its day-to-day operations and its strategic vision. So it's been quite a ride. I've enjoyed every step of it. And each time I made a change, I always kind of told myself, I'm trying to take my clients to a higher ground from a position of independence. And I think I've successfully been able to do that.
Well, thank you for sharing. And let me ask you this, talk to us a little bit about PDS. You guys have, impressively grown your AUM to what, 1.6 billion now, if I'm not mistaken?
Yeah, pushing 1.7. Yep. Really
cool. And talk to us about that. Have you guys done that through organic growth, inorganic growth? What's your strategy? We'd love to hear.
Yeah, that's a great question. And when I joined the firm, we were probably close to $500 million in AUM. And I think the biggest part of our growth, and it's all been completely organic in the sense that we've not acquired any other firms. I think when I moved to PDS, that would be the closest thing we've had to an acquisition. But the growth of those assets has largely probably been attributed to a significant change that we made in 2016. And at that time, I was looking at the industry, I was looking at the way that we priced our services. And I kind of said to myself in a nutshell that, advisory firms, independent RIAs are all saying the same thing. I mean, and I mean this in a complimentary way, but we're all touting trusting relationships, experience, credentials. Everybody might be advertising a different or a better mousetrap as far as an investment strategy goes. But by and large, we're all talking about doing the right things, being comprehensive, being the quarterback of the client relationship. There really wasn't anything that was making anybody stand out. And I looked at the way that we were charging our fees, and we had a what we called internally, not from a compliance perspective, but internally we called it our retainer fee or our fixed fee option. And then we had some clients on a traditional AUM schedule. And, our retainer fee did not necessarily, the formula that we used didn't make any sense to me. And I kind of just came to this conclusion that we need to commit completely to becoming a fixed flat fee firm. We need to eliminate our AUM fee model, and we need to revamp how and why we price our clients the way we do. So we went through this incredible transition over a period of a couple of years where we transitioned all of our clients to a fixed flat dollar fee, contingent upon the value that we provide, the time that we put into it, the resources that we apply to those client relationships. And what that has led to is probably a change in what our traditional client looks like. And so where 10 years ago, our traditional client might have been what you'd call the millionaire next door, I think what we've really done is we've moved upstream in terms of the clients that we're serving, because in a flat fixed fee model, it is an extreme differentiator in our marketplace today. And that doesn't make it better than any other model. It just, we worry about what we can do and how we can build the best business for our employees and for our clients. And that's been our conclusion. And that's led to a lot of really fascinating client acquisition opportunities for us over the last, really, especially over the last 5 to 7 years.
Wow. And how many total advisors do you guys have?
So in the firm, we have 16 total employees, 9 folks of which deliver financial advice on a daily basis. Some of those folks serve more in a stronger investment capacity, and some of them serve in a solely financial planning, wealth management capacity. But we work completely in teams. Everybody's on a salary structure. So nobody has a book of business, if you will. We all, through these teams, we serve some dedicated clients. But again, there's no proprietary sense within the organization. It's all hands on deck anytime we can do anything to help a client.
Really cool. Thank you for sharing.
And I also wanted to ask you, so you were recognized as one of the 50 fastest growing firms with the AUM over 500 million by Financial Advisor magazine. In there, it did say that you achieved, what was it, about 33% growth, I believe, from 2022 to 2023. Tell us a little bit about that. How did you achieve that growth between that year?
Yeah, it's interesting. So our message to clients is, one of the things we routinely say is our job is to enhance your wealth, not our own. And what that really means at its core is that we've built this business to be as conflict free as we possibly can be. And I tell, potential prospective clients, I say, we still have a conflict, and our conflict is that whether or not you choose to work with us or choose to stay and continue working with us. And so, for us, we've been able to take that message and we've gotten better at getting that message out there. And part of that is we have an incredible relationship with our marketing, our independent marketing agency that we work with. They really understand us. They understand our message and what we're trying to tell people. And I think, what's really started to happen amongst the consumers is that they've, as the industry has evolved from stockbroker to insurance broker, commission world to, I'll call it fee only, and I'll put that in air quotes, and I'll come back to that in a moment. But, evolving to a flat fee model, one of the things we tell aspiring or prospective clients is that, we've professionalized the advisor fee. There's nothing else in this world that you pay for with basis points. And I tell them, I say, if I talk to you about you paying me a 0.5% or 1%, that really sounds nominal. It sounds marginal. Might be something you'd find in your couch cushions, right? 0.5%, that's nothing. But so when we talk to them about our flat fees and we talk in dollars and not in percentages, I think a lot of people have realized, like, wow, this has, extreme value to me. And then we talk about the compound effect of those fee savings over time. And people are starting to get that. And so the word of mouth, the referral business that we get is significant. We also have a lot of folks finding us through online traffic because they're looking for the message that we're giving. And then I would couple that with, we have an extreme focus on tax planning. And so we recognize that the dollars we keep in your pocket from an expense perspective and the dollars we keep in your pocket from a tax perspective are significant, and those dollars are allowed to continue to compound. And those are things that resonate with today's consumer.
And so let me ask you this: when you said that you guys had started picking up more clients, different clients, when you had switched over to a flat fee, can you elaborate on that a little bit? When you say different clients, I would like to know a little bit more about that.
Yeah. So, if we look at Advisory HQ, which puts out an annual study on average advisor fees, I'm just going to use that data because I'm most familiar with it. But they say that the average advisor fee for $1 million of assets is 1.02%. And the average fee for, I believe it's $5 million is 84 basis points. And so if we can just apply some of those numbers, I'd say that if somebody's got $1 million, the average fee is ballpark 10 grand. If they've got $5 million, the average fee is close to $40,000. Again, using Advisory HQ study. And so when we talk to clients now that have $2 million, $3 million, or $5 million or more, and we're charging them a all-in comprehensive wealth management fee on a fixed flat fee basis, if, for example, our fee is just round figures, $20,000, and they've got $5 million of assets, that's presenting a full $20,000 savings against industry average. When we're given the opportunity to compare it to what they're currently, being charged by an existing advisor, if they have one, we'll identify specifically what those savings are, but then we'll also show them what that savings amounts to on a compound basis over time. And without getting too deep into the math of it, essentially the way it usually works out is it works out to them having about a third more assets than they would otherwise, 30 years down the road. So if you take a retiree at 65 and you think about an age 95 mortality, we're able to show them how they can pay for their long-term care, their inheritance, the financial legacy that they want to leave, whether that's to their children or to other charitable institutions. And so that resonates with people. So what I meant by changing the client dynamic is it's probably helped us swim upstream in terms of average client size.
And so, Jamie, I want to ask you, in your experience throughout your career, what are some of the most valuable lessons that you've learned as a financial planner? Any advice you would provide to aspiring advisors looking to really make their mark in the industry?
Yeah, this is kind of, it rounds out a little bit more to my career, but I spend a lot of time with college students, some high school students, anybody who's looking to transition into the career. I've always felt like if they call and reach out and want to talk about, what they're trying to accomplish, it's easy for me to give them my time and listen to what they want to do and try to give them some guidance. And so one of the things I routinely tell folks, young people, is that you've got to have a vision for what you want your career to be. And that vision can be any combination of things. But for me, it was always that I wanted to have, number one, I wanted to have control or autonomy over my schedule. So I wanted to know that day to day, I could do the things I wanted to do personally, professionally, and I wanted to control that schedule. The second thing is that I wanted to make a really good living, and I wanted to have some degree of control over my compensation. And so getting into the field of financial planning, I was really able to marry those couple of things together. But beyond a vision, you have to, once you kind of map out what you want your life to look like or your career to look like, you have to take very intentional steps. And I've had to make some difficult decisions along the way. When I left Crow Chiswick as a young aspiring CPA, and I went to Principal Financial Group, and I left there to go to Investment Partners, and I left there to ultimately come to PDS. Those were all difficult, crossroads for me, but I knew what I wanted my vision to be, and I knew what I wanted my clients' relationship with me to look like. So then I was able to take very intentional steps to achieve that vision. And then I always tell people, I say, you've got to do that with a sense of urgency. You've got to pursue it. And a sense of urgency is different than impatience, because a lot of times people will say, oh, well, you might just be impatient. Well, to me, impatience is, why didn't you give me what I wanted yesterday? And a sense of urgency is, I know what I want and I'm going to go get it tomorrow. And I tell people, I say, if you have a vision, it will help you make very intentional steps along the way. It'll make those tough decisions easier, ultimately. And if you pursue it with a sense of urgency and then don't become complacent, what made you successful initially was hard work. It was effort. It was a willingness to hear no, willingness to take chances. Don't ever become complacent and give that stuff up. And complacency to me is an utter disregard for doing the things that made you successful to begin with.
Right.
So I kind of put that formula in place. I look back on my life and realize that's what I was doing. And now I've really tried to frame that for young people so that they have kind of some guiding words of wisdom, if you will, to help them lead them down that path. And then the other thing I learned, and I learned this from a gentleman that I worked for at Investment Partners, the guy who owned the firm, his name was Steve Stocker, still around, of course, fantastic individual. But he taught me like two things really that I learned most. One, always have a stringent culture of compliance. So never waver on anything related to your ethics. And number two, care about your people deeply. And if you do that, because people don't care what you say, they care about how you make them feel. And, I watched him do that. He did that with me in a few instances where I was at a tough crossroads considering leaving his firm. And he still put his own interests aside and gave me the best counsel he could. And that was an eye-opening experience for me. And one that I've now said, like, I owe that forward to any of our folks at PDS who come to us with career opportunities. Always do right by people. The rest of it, and by people, I mean your employees, your staff, and your clients. The rest of it takes care of itself every time.
Thank you. And let me ask you this: what's on the horizon for you guys at PDS? Where do you guys have had a lot of growth over the last couple of years, especially. Where do you plan on getting to? Is there an AUM that you guys have in goal? The amount of teammates that you guys have. What do you see on the horizon over the next 5 years?
Yeah. So when we think about growth in the organization, we don't think about AUM. That's never been a measure that's been important to us. Of course, our fees aren't a derivative of AUM, so that's probably a big part of it.
Right.
For us, we laid out a couple of years ago. We've put a lot of time in the last 5 years into our personnel chart and helping people understand how when you join our organization, this is what your upside opportunity looks like. Here's how you work your way through the organization to have the opportunities that you want. We further put some definition around that. We call it the 3 C's. And so we talk about career, control, and compensation. So career is, can I come to PDS and see upside potential? Can I see an opportunity for growth? So this isn't Jamie sitting in a position of hierarchy, holding on to his clients, trying to stay till he's 75 or 80 years old, milk out the last every dollar that he can out of the organization before I might get an opportunity. Career is, I look at it and go, wow, I'm going to start at the entry level and I'm going to learn every stage of the way. They've outlined for me what that looks like. They've talked to me about how long that'll take, what the expectations are along each step of the way. So I can see my career growing here at PDS. Control is, do I have the ability to kind of control my day-to-day schedule? Do I feel like I've been given the reins to be, a responsible professional? Do I need to ask for time off to run to the dentist? Do I need to take PTO for every little thing? No, I've got control over my schedule and I've got ownership of the tasks that I've been entrusted with. And so we're okay with people making mistakes as long as they're mistakes of effort and not foolish mistakes, And so we tell folks know where your boundaries are, understand those and respect them, but take chances. And we just mean simply like, if you need to solve a client issue, pick up the phone and call them. We want them to have a relationship with you. And we do that for people from day one. So there's a little bit of control over where their career goes. And then compensation, as we've always said, as we continue to grow the organization, and we've been very fortunate and blessed to have some of these opportunities the last couple of years with growth, we've always tried to push as much of that financial reward downstream as we can. And so we've got targeted net income goals for the organization. And we've got levels where we say, look, if we're receiving or if we're producing a net income above a certain percentage, we're probably not reinvesting properly. And we built an incentive compensation program a few years ago. So we have base salary, performance bonus, and now incentive compensation. This is our third year for it. We've had outstanding results, and they're not personal individual incentives. They are team oriented, organizationally driven incentives that we help produce I hate using the term behavior, but produce the activity that is most beneficial for our clients and for the organization. And so all of that coupled together, career control and compensation, we think, if we can handle all those things and pay our people as well or better than anyone else in the industry, then we we get our pick of the litter in a way. Couple that with the fact that we close every Friday at noon throughout the year. And it's a tough place to leave, we think.
That's really cool. And let me ask you this, what type of turnover have you guys seen? Having such a strong culture, what type of turnover have you guys seen over the last, 10 years? 'Cause I could tell you, having come from doing sales my entire life, it was a lot different hiring salespeople back in, let's say, the early 2000s than 10 years later, even in 2015. The mindset had changed. They weren't nearly as loyal, didn't stick around. It seemed like, it was almost like, we're going to come learn everything we can off you, but if there's a better opportunity, we're going to go take it. Right.
Right.
And so let me ask you this, what do you guys do there to eliminate those type of individuals and, make sure that doesn't come in and one bad apple doesn't spoil the bunch?
Yeah, so our hiring process is pretty extensive. One thing, the last stage of it is an interview with the entire organization in the conference room, which is not meant to intimidate anyone. It's not a Google-esque type of environment either, where we're trying to rapid fire the most difficult questions we can out of them. We want to have a conversation with them, much like the way you want to engage with your audience and engage with the people that come onto your show. We want them to feel this kind of sense of family when they get to know the organization. So I think number one, the first thing is we go back to is making them understand, how can we make them feel like they're part of the team, that they're respected, their input is valued right out of the gate, right? So day one, they feel like this is a different organization than I've been at in the past. Then all the other things that we've already previously talked about, those kind of work themselves into the formula, if you will. But I will also tell you that, that interview process at times has not yielded the perfect results that we'd like. I can say this, and I hope everyone in our organization is listening, but, we have 16 people today. I have never in my entire time at the organization felt like, I hope no one ever leaves. We have an incredible team that is mostly young. I'm 47. One of my business partners is a couple years older than me. One of them's a couple years younger, and then one of them's in their late 30s. Just about everybody else in the organization, for the most part, is younger than that. And we have a great balance between male and female. And everybody's got really, even the decision-making authority within the organization is pretty well balanced that way. And so when we make major decisions as an organization, yes, at the partner group level, we probably get to strong conclusions of where we want to go, but we do seek input from others within the organization, whether it's on a significant technology migration or it's just, how we want to handle the holiday party and what are the things we want to do for client appreciation this year. Like, we want people to have a vested interest in what the organization's doing. And I go back to my example that I had with Steve when I was getting ready to leave, and he gave me the best advice he could give me. I had a young person leaving about 2 years ago, and came to me it's never a good time to have a good employee leave. But he came to me with an opportunity that wasn't in the financial planning field, but it was going to allow him to broaden his horizons for something, a challenge that he wanted. And I told him, I said, if you stay at PDS for 5 more years, these opportunities probably aren't going to come around. I said, but if you leave and go to a larger organization and you find out 2 years from now, 3 years from now that, you know what, I miss that culture, that small company family culture, you can always come back. But, if you
Oh,
want to have
wow.
this opportunity, you might need to take it now. And it was really an opportune time because somebody else on my team had just left on maternity leave for a couple of months. But, that was an opportunity. That was a moment in time where I had to give that person my best advice. They ultimately left. And it did leave a void for a period of time. But now we've been able to replace that person. And here we are. We've got great people. So do the right thing and things just eventually work out in your favor.
I think that, gosh, I think that's great. Because I know myself. I know myself. I've always had that mentality of, if they left, I never left the door open for them to come back, right? And look, as I've gotten older, I've realized that I've passed up on, you know, having that strong opinion there. It should not have been 100% of the time, right?
Yeah. Yeah. I mean, I think we all go through, but maybe Mike, your background's a little different than mine. Maybe you didn't have a Steve Stalker, like the story I told you about the gentleman I worked for there. Like I might not have felt that way. We're all a byproduct of our experiences. And so that's why, like, I try to always take the time to inventory those great moments and recognize like, that's how I would love to have somebody say that about me one day.
Yeah, that's really cool.
Well, shifting gears a bit, Jamie, it's always exciting to hear about investments on the horizon. Are there any investments or sectors that you're particularly excited about right now? Anything that you see as potential for the next wave of wealth creation?
From an investment perspective, like our firm has a philosophy that the hallmarks of a great investment are they're liquid, they're flexible, and generally pretty transparent. We think the correlation between successful investing, the one common thing we can find is generally expenses. And so, as you can imagine, I'm leading you down this path that I would say to you that the core of most client investment portfolios at PDS is generally going to be made up of broad-based, low-cost, tax-effective index funds. That being said, what I will tell you is that the nature of business is changing. So, there's the shift to private equity, and we're seeing it in a couple of places. I think number one, we're seeing it in owner-operated businesses, and this isn't an investing thesis, but it is a kind of where are we headed from an economic perspective. Owner-operated businesses are becoming a thing of the past. Even advisory firms, medical practices, anybody who has a recurring revenue stream is getting gobbled up by extremely high valuations of private equity. And what's happening to that? And I think about the experience, and I won't name any names in our industry, but some of these large roll-up opportunities, I'm sure they're putting out a good product. But I always liken it to the difference between going to a family-owned, authentic Italian restaurant and, one of the family members is the hostess and seating you, and another one's working tables, and another one's working the kitchen, and you're having this really unique, custom-tailored experience. And then there's the opportunity to just go to a national chain restaurant where they're just churning through employees. And so private equity is disrupting this owner-operated business model significantly. And so I think that's one theme that we want to keep an eye on. Now, transition that to the investment space. And what you're seeing is what was the number one way for businesses to exit or owners or startups to exit 15, 20 years ago? Well, it was through an IPO and become a public offering and land in publicly traded mutual funds, individual equities that people bought and sold, or these index funds that I mentioned. A lot of businesses are taking the IPO out of play and now are taking that exit route through private equity. And these are great businesses. So I think we're going to have to continue to evolve how we think about investing client capital. So right now, our position is that we don't go source private equity opportunities for clients. However, because I told you we have moved upstream, the further upstream that you move, or the greater your liquid net worth becomes, the greater allocation you can apply to some of these more, I don't want to call them speculative, but private placements. And so we're spending a good bit of time going through due diligence, reviewing those for clients. And we're typically offering them not so much a recommendation to buy, but a capacity to buy. So, kind of here's what we think your upper limit is on something like this. Here's the good, the bad, and the ugly that we see with this particular investment, recognizing that when they're marketed, they all sound good. I mean, have you ever had a private placement pitch to you, short of some of these folks who are doing the one-off garage beer, but, have you ever had a private placement pitch to you where you go, that sounds terrible? No, they all sound good because they're coming at you.
I'll tell you this, Jamie, I have been suckered into, I won't even admit the amount of money that I've lost on just getting suckered into, these private pitches. And I'm like, man, this sounds awesome, right?
Yeah.
This where you think you're going to turn a quarter of $250,000 into 20 mil, and then next thing you know, like you just get absolutely burned. Like
waiting.
Like, yeah, even I can tell you, like even Peloton, right? I remember not investing in their new product, but I remember them having this pitch with us, and I remember just being like, wow, this is going to be the next biggest thing, right? And then they still haven't like introduced it to the marketplace. But what you're saying is absolutely, I resonate with it very well. So what I wanted to ask you is, on that note, what do you think with what's going to take place with the economy? We've had so much disruption and so many changes since COVID. With where the market's gone, obviously. The market's been on an upward trajectory right now for quite some time. Real estate's been holding, even despite where the interest rates are at. So we still have a lot of debt. But what are your opinions? What do you think is going to take place?
Yeah, that's an interesting question, and one we get all the time from clients. And the one thing, I wrote a blog post about this a couple years ago called "The Future is Always the Same." This time it's different. And it's just kind of interesting to me that if I were to say to you, let me drop you down in a couple of periods of time, right around the tail end of the Great Depression, World War II, Korean War, Vietnam conflict, Kennedy assassination, the tumult of the 60s, which, in a way we went through again in the early 2020s, the tech bubble where we had in the early 01, 02, and then we had 9/11, and then we had Great Recession. You're familiar with all these things, right? And then COVID, of course. There was never a point in time in the history of mankind, or at least as an investor, where you'd look around and go, everything's good. Everything's going well. I mean, every now and then we have fleeting moments where we go, wow, things seem to be on the rails. But today we've become so politically charged that only half of us can be happy. The other half has to be disappointed in the outcomes of elections and everything else. And so this idea that interest rates, we went through 2022. Think about that. Interest rates had never risen at a pace with which they rose in 2022. And here we are, right? We've survived. People, yes, did that affect demand in the housing sector? A little bit. We live in Columbus, Ohio. I live in Columbus, Ohio. And I would tell you that demand for housing has not waned at all, even in light of interest rates. But nationally, I think that's been a storyline. But I think we expect that rates will start to trickle back down. My point is that if you're an investor, the question would be, I guess I'd frame it kind of the way Warren Buffett always did. Are you an investor or are you a speculator? If you're an investor, you've got time on your side. And if you're a speculator, I think a more appropriate term would be you're a guesser. And so for me to offer like where the economic headwinds and tailwinds are going to come in the near term, we just don't do that. So for clients, for us, the way we manage that is simply we make sure that we have the appropriate amount of cash reserves that they need to cover their expected portfolio withdrawal needs over the next 5 to 10 years. And if we have a strategy for that, we can withstand the volatility that comes with economic uncertainty. So how's that for a great non-answer?
Look, I think that the way you phrased it was very diplomatic, very fair. I think that I like that, right? Because we get answers on all three of the sectors, right? Most people will tell you what they think. It would amaze you that a lot of people in our space, I personally myself feel like the market seems frothy, right?
Mm-hmm.
But there's people in our space that thinks that we're just at the start of something amazing, right?
Yeah.
Then there's also people that think that the same, they feel the same as I do. Then there's people like yourself that's like, hey, listen, we take our clients' money and we make sure that there's not a huge shock when a 2022 or a 2020 happens, or even a 2009 for that matter, right?
Yeah.
However, I like that. I think that's the type of I'll tell you this, that's the type of advisor I need, because Ashley's heard this a million times and other guests have heard it. I was like, I hate my advisor, and I can tell you that I don't think I've ever even thought of leaving, right? Because of
Let's hope they don't watch the show.
I'm just hoping it's not Ashley.
Actually, I don't care if they do. It wouldn't be anything. I haven't said in person, right?
Yeah, it's interesting. I tell folks, like, if you want an opinion, you can find it, because I think a lot of times we're always looking for affirmation to our own biases, and a good advisor's job. And this is where it's really morphed over the years. Think about 30 years ago, the role of an advisor and the conversations that happened in client meetings, and then put that into today and how we've become so attuned to the psychology of money and behavioral finance and conversations that we can now have with clients to help them understand why they feel the way they feel. And I think that's a big part of it. And so, we just try to keep our clients' emotions balanced. We try to give them counsel without any emotion ourselves. But if this all fails for me, I certainly probably have a future in meteorology. So.
Well, Jamie, we really want to thank you for joining us again today on the show. We really appreciate you sharing your wealth of knowledge with us and your insights with our listeners. It's been a lot of fun having you on the show with us today.
Yeah, and if I could just say one thing in closing, thank you very much for what you're doing for our industry, because it's not easy to create content on a consistent basis. And I know when I was invited to participate, I was really impressed with the packet of information I was provided so that I could be prepared. I kind of knew what to expect. Your show is really professionally done, but you fostering these conversations and facilitating this and allowing advisors to hear other perspectives in such a clean, easy to absorb format is doing things for our industry that, really we can't thank you enough for. So I'm really appreciative of it.
Thank you, Jamie.
Thank you so much.
We've done about 100 episodes in the last year that we got launched on this. I think it was 13 months ago. 12 and a half months ago that we launched the podcast. And, put it this way, if we wanted to, we could probably do 2 or 3 a day. But we don't want to water down the content that's delivered. And, I think as well, it gives, you guys a chance to talk about your firm and to showcase it on your platform as well. And, with that, it's we have a growing audience of individuals from investors, even private equity individuals that view our podcast, advisors, other podcasts, but other RIAs, and we've had a great time doing this, and we thank you so much for coming on today.
Keep up the great work. Hope we get to talk again soon.
Thanks.
Thank you.
And to our listeners, thanks for tuning in to another episode of the What Matters podcast. Be sure to join us next time as we continue to explore topics that truly matter. Until then, take care and stay curious. Thanks, everyone.